So traders, I have been doing a bit of analysis today on the Dow Jones Industrial Average Index. I apologize, I actually didn't include that in today's update. So I want to do a bit of an update for you to share with you. We're actually getting a false breakout, and it looks like it's going to be a false breakout, but what does that false breakout mean? And where's the Dow Jones now likely to go because of, looks like it's going to be that false breakout. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, I'm running a webinar today and I'm going to be teaching you my #1 trading system that I've been trading for majority of my trading career. Plus I'm going to share with you the 3 secrets that I use to go from $250,000 in debt to making a full-time income. Very first thing in the description, guys, click on that, join me for my next free webinar and I'll see you there. Alrighty traders, let's get straight into it. Now let's look at the Dow Jones and what's really going on here. I did a video today talking about the S&P 500 and the Nasdaq. Beautiful, beautiful updates. But I didn't really touch on, actually I touched on the S&P, but I really didn't touch on the Dow Jones. But the Dow Jones is getting a bit of a false breakout. See, there's a couple of different types of false breakouts that the market gives you. You can either get a false breakout to the upside or false breakout to the downside. Generally, you might have a bit of a support, right? Support, false breakdown, and then comes back up. Or you might have a bit of resistance, right? Resistance comes back up, and then we have a reversal back down again, right? So what tends to happen with these types of patterns, if we get a false breakout and we get back inside of the channel, we're likely to run to the other side of the channel. I'll give you an example of this. The Russell did this. Look at here. This is the actual Russell. So step number 1 is we have a resistance level and we have a support level here, okay? Like that, like so. Step number 1 is we break out. Step number 2 is that if it's a false breakout, we get back inside the channel. If so, then we're likely to run to the other side of the channel, right? So you can see breakout, is it a false breakout? If it is, it's going to get back inside the channel. And if we get back inside the channel, we're now likely to run to the other side of the channel. So that's how you determine whether something's going to be a false breakout. And if it is a false breakout, where's it likely to run to? So, but also on the flip side, that also works as well too. For the bullish side, right? If you get, let's actually bring up stock called HD, right? I'm just going to bring up some examples of what I'm talking about here. Okay. So just going back to here, as you can see, let's bring this up. Can I bring up, let's actually do that, right? So let's do this here. Let me just squeeze this up a little bit more. All right, so I'm just using this as an example. I'm using this for the bullish example here, right? There was the support and there was the resistance. See the channel? But this is the flip side, right? Look at this here. We broke down and we got straight back above it. See that there? We got back above it, and then where's the target? The target is to the other side of the channel. Now, obviously this one kept going and going and going, but if you're looking at some sort of a pattern, this is the pattern, flush down, flush back up. If it does that, then there's a high probability we're going to run to the other side of the channel. I'll give you another example of that. Oxy, this is actually a trade that I took recently, a bit of a false breakout pattern on the Oxy trade, all right, on the Oxy movement. Gee, look at Oxy, it doesn't look good. Go Oxy, go. All right, so look at this here. So as an example, Oxy had what? Oxy had this as the resistance level up here. And then we had very, 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 very good strong support down through. See all this support level down through here? But look what happened. We had what? We had the flush down through here, as you can see. So we had the false breakdown. Look what happened. Came down, came straight back up, and we got back inside the channel. And then as you can see, we got back inside the channel. So where's it likely to go to? It actually spent a bit of time here and then actually rallied up and ran to the other side of the channel. So as you can see, right, these patterns work time and time and time again. And this is where guys like, if you look at to learn my #1 trading pattern, join that webinar, link below, and you'll be able to see how I trade the markets. But this is one incredible pattern I'm teaching you guys for free. And so you can start to recognize these of not only what the pattern is, but where it's likely to run to. There's a really good probability about these patterns that work out. And the best thing I love about this is that even if you're 50-50 right, your risk is like, that'll be your risk, and then that's your reward, right? So your reward is like probably at least 2 to 1. So even if you're 50-50 right, you could still do what? Winner, winner, chicken dinner, right? That's what it's about. If you just use this pattern that I'm teaching you right now, and you're going to have losses, let's just say you traded this for the entire year next year, and you had 100 trades. You had 100 trades. And on the 50 of the trades, you had a $1,000 loss, right? So what have you got there? $50,000 loss. Let's just do this here, right? Oh, $50,000 loss. Oh, right? But then your other 50, right? Because it's not a $1,000 loss. What is it? It's a $2,000 profit, right? Because why? Because the average profit is double than the risk. This is just the average anyway, guys. I'm just giving you an average, right? Even if you were 50-50, right? Which is not. It's probably gonna 60 to 70% correct. And sometimes you get a lot more, right? This one here ran to a 200% return, right? So $2,000 is $100,000, right? So you have your $100,000 in 100K in profit. Obviously wipe out the 50,000, you're left with a $50,000 profit there. You with me so far? As an example, right? If that was your risk and if that was your reward, right? I'm using these numbers as an example. Nothing's a blatant statement, but I'm just trying to give you guys an idea, rough guide of why this is so powerful. The reason why I love trading it in my sort of trading patterns. So the reason why I bring that up is because sometimes the market can give us a false breakout when it's in an upward trend, right? So we have an upward trend and it goes here, bam, and we're in a bit of a channel to the upside, and then suddenly what happens, we break down, but then we get back inside of it. See that through there? See how it broke down but got back inside, and then we have this channel up here. Then guess what? It's now likely to run to the other side of the channel, but this is just a different type of channel. Instead of it sideways, we're going up. So that's how you qualify a false breakout. And if it is a false breakout, you now know where it's likely to run to. Run with it, guys. Make a whole bunch of mola from it. I just hope you realize that the contract that you sign says that everything after the second decimal point you owe me, right? So make sure you send me the change, you filthy animal. Alrighty, so let's go have a look at what I'm talking about here when it comes to the Dow Jones. Look what's happening here. This is the Dow Jones here, and we're starting to get what? Ooh, look what's happening. Now, guys, I just doing some analysis and looking. It's like, oh my goodness, look! Ooh, look at this here. Support. Look what happened. Came down. We broke down. We rejected. But look what happened today. We got inside. Now we need a bit more follow through to confirm this false breakout. So I would say if we can start to get a nice move back up towards here somewhere, what would be perfect is to see this thing maybe do something like this and then start to run. That would be perfect because that's just going to give us a higher low. But with this flush down and a flush back up inside of it, that tells us that now the Dow Jones from the false breakout, remember the false breakout is what? When you get the false breakout, there's a high probability, not certainties, guys, okay? There is no certainties. There's probably a good 70% probability and a 30% chance of just not doing well. So don't be just going, oh, YOLO, because your John said so. No, I'll give you YOLO, right? I'll go get my cricket bat from here in Australia and come down to you and say, listen here, donkey. No, all right? And that's actually talking about that. One of the hardest things traders have is that they focus so much making money on one trade. But trading is about probability, right? And the only way you can see probability is take this pattern 20 times and then you see the probability. Anyway, so we're back inside of here. Where's it likely to run to? To the other side of the Chanel, right? The Chanel. So the other side of the Chanel is where? Depending on how long this takes, but we're probably likely to be up here towards, geez, this is the daily chart. So by the time this starts to filter out, we could be here from 39 to, this is probably going to be a 40,000 print. How was the, yeah, this is probably going to be, yeah, so this actually could be a 40,000 print in the Dow Jones. So that's what we see there. That's how you see from a false breakout perspective. Once again, this is where we're at right now. We've had a move down and then had a very strong move up. We're getting a very nice strong breakout of this level through here too, which is very nice, which I like to call momentum trend lines on the downside when we get these pullbacks like so. All right, we're there right now, but the pullback's probably through there somewhere. Again, we did get that through there. So again, I would like to see a bit more follow through. But when you get these pullbacks, like so, and then you start to get a very good, strong, as you can see, pullback. And then once you get a break above it, we go for a run. Pullback. Once we get break above it, we're likely to go for a run. But that's what I'm saying through there, guys. This is actually a bit of analysis on false breakouts and how to identify them, what's likely to happen there. Traders, make sure you join me for my next webinar if you'd like to learn how my trading strategy and how I trade the markets. First link in the description, and I'll see you soon.